Welcome to Exchange Traded Fridays, brought to you by ETF.com. I'm your host, Sumit Roy, and we got another exciting episode lined up for you all today. I'm sure a lot of you saw what happened on Monday when a couple of America's biggest companies were pummeled on concerns about a Chinese AI company called DeepSeek. We're going to be talking about the ETF impact from what some are calling an AI earthquake. Then we'll switch over to the Trump tariffs, which, if what the president says is true, could be implemented as soon as this weekend. Our very own Kent Tooney, research lead at ETF.com, has the inside scoop on what that means for ETFs. But before we get into the market action, we're going to give you a special sneak peek at the ETF.com awards. Kristen Myers, our editor-in-chief, is here on the pod to discuss the list of nominees that we released this week. There's some really, really interesting names on that list, so you don't want to miss it. So joining me today on the podcast are, like I said, Kent, Kristen, as well as our wealth management editor, Jeff Benjamin. Guys, great to be here with you. How are you all doing?
Hey guys, I always love coming on Exchange Trader Fridays.
Yeah, great to be here, Sumit.
Absolutely. So, Kristen, I want to get into all the action with DeepSeek and tariffs in a bit. But before we get there, we have to touch on this news about the ETF.com awards. We just released a short list of nominees for this year's awards. Can you tell us about that?
Yeah, I know everyone was talking about DeepSeek, or so many people were talking about DeepSeek and the president. And I was just thinking, I mean, surely the world knows that the biggest news that happened this week was the nominations for the ETF.com awards were released, dropped them earlier this week. So we have 18 categories this year. We have 6 new categories. We had hundreds of nominations, well over 700 nominations come in for these awards. And honestly, it's been tweeted out that we've made it very, very difficult for the judges this year to make up their minds about who the winners are going to be. So we can touch on some of the specific categories if you want, where we think that we might see a lot of jockeying for that lead position. So let's actually start with those 2 big categories, right? Sumit, it's going to be ETF of the year and best new ETF. I think are going to be the 2 really hard categories, I think, for some of the judges. Best new ETFs we've got 2 Bitcoin ETFs in there. We've got the VanEck Bitcoin ETF, that's HODL, hold on for dear life. And then the iShares Bitcoin Trust, IBIT. And I quickly looked before we decided to jump on and chat at the ETF.com Pulse tool. And those 2 funds are actually in, if we look at top performance, of course, Bitcoin rising to new highs. I mean, both of those funds have been doing well over 140% over the last year. So it's just incredibly difficult to look at some of these categories. The remainder of that category, we've got the Range Nuclear Renaissance Index ETF, that's NUKES, NUKZ. The Texas Capital Government Money Market ETF, that's MMKT, and then the Yield Max MSTR Option Income Strategy ETF, that's MSTY, rounding out the best new ETF category. So we've got a lot of choices in there. I don't know if we have predictions or if anyone wants to guess their or to tell us their favorites.
I'm so interested in seeing who wins the best ETF of the year award. For me, it comes down to VOO, who had the record year for inflows, $113 billion of inflows. No ETF ever has had inflows that large in a calendar year. But then you have IBIT, which is just such a revolutionary product. First ETF, fastest ETF to reach $15 billion in assets. I mean, this is a battle of heavyweights. I wonder if, the judges will end up giving, the best ETF award maybe to VOO, and then IBIT could get best new ETF.
Well, here's the remainder of the ETF of the year. So you've already mentioned VOO and IBIT. We've also got the Granite Shares double long NVIDIA daily ETF, that's NVDL, the Janus Henderson AAA CLO ETF, that's JAAA. And then again, we do see the Range Nuclear Renaissance Index ETF, again, that's NUKES, popping up in ETF of the year. So yeah, I mean, 2024 was a pretty incredible year. For funds. Obviously, we had that record-breaking over $1 trillion in inflows into ETFs this year. And I think it's no surprise that given so much interest and excitement around ETFs, that we really are seeing some of these heavyweights come out. And then also, frankly, it was just a great year in the market. So Performance-wise, a lot of these funds did incredibly well. The spot Bitcoin ETFs doing well, of course, as we saw Bitcoin prices topping over $100,000 per coin. So I think the judges are really going to have their hands full this year. We did not make an easy team for them this year to come up with the best ETF or the best new ETF.
Right. I thought it was interesting how one of our esteemed judges, senior ETF analyst at Bloomberg, Eric Balchunas, compared the ETF of the year nominees to the 1994 Oscars, where he had Shawshank Redemption, Pulp Fiction, Forrest Gump. I mean, some of the biggest movies of all time, or at least over the last couple of decades. But yeah, that just shows the innovation, the level of prominence of these funds, and also the difficulty in selecting which one is the best. I mean, they could all be winners in their own right.
Do you know who won that year?
I hope Shawshank Redemption, because that may be my favorite movie of all time. But I bet it was Forrest Gump, though. I don't know.
I think we need to figure out which fund would be would be what their movie counterpart would be. Like, what is the Shawshank Redemption of this category? What's the Forrest Gump of this category? And so
I think Nukes could be Pulp Fiction, just because it's so different.
I agree with you. Yeah,
it's innovative. It's different. Yeah.
We're going to have to see. I mean, we have all the way till, again, as a reminder for everyone, April 23rd is when we have our awards dinner. Tickets are already on sale. Make sure to go check out ETF.com/awards-2025 if you want to take a look at, the entire short list. A lot of great options in there for investors. There's a lot of great options, a lot of funds that you might not have considered. And then, of course, we have the Lifetime Achievement Award category with, again, some heavy hitters in there. Bob Pisani is on the list again. He was shortlisted before. We'll see if he takes it home this year. We've got Rob Arnott, who's the chairman of Research Affiliates, Bruce Bond from Innovator, George Millie Stanley, who's over with State Street, and Joanna Gallegos from Bond Block. So a pretty good list, but I feel pretty proud of the team this year for coming up and really kind of coming up with this short list. I think we've got some really great funds in here. And like I said, I feel very proud of the fact that it is not going to be easy on the judges for who they're going to decide.
No, absolutely won't be. It'll be very, very difficult. I'm really looking forward to seeing who ends up winning some of these categories. So the award show, very important, but of course, a lot of people are listening today to hear what we have to say about DeepSeek. This was just such a monumental event, it seems. I mean, no one even knew what DeepSeek was, or a lot of people didn't know what it was last week. And then suddenly the whole world seems to know what DeepSeek is this week. Jeff, some people are calling Monday DeepSeek Mageddon because of the massive stock market reaction to China's latest AI models. Can you talk about some of the big ETF moves that we saw?
Yeah, well, it's almost like which ETFs didn't have a big move on Monday. What happened? Well, we already summed it up, but it's basically DeepSeek represented a major threat to the leading AI companies in the US. And when you talk about leading AI, you got to talk about NVIDIA. NVIDIA, and along with a handful of other stocks, have been leading and carrying these market cap weighted indexes for a few years. What happened on Monday is a lot of investors who might have thought they were much more diversified in a broad market index realized that market cap weighting cuts both ways. And almost what they used to say about the auto industry in Michigan: when General Motors sneezes, Michigan catches a cold. Well, what happened on Monday is NVIDIA sneezed and the stock market caught a cold. The market cap weighting can be a brutal reality if you're not paying attention to it, especially when you've got these kind of lopsided positions out there. But if you had anything directly exposed to NVIDIA, you lost. For that day anyway, you were down 16% or so. There was a bunch of leveraged ETFs out there. And Samit, I know you wrote about that. Those things were down double or triple that.
Yeah, 34% on NVDL. Insane in one day.
Yeah. But also on the other side of that, there are ETFs, that single stock ETFs that short those positions, and those were big winners for the day. But as we've written about a lot here at ETF.com, these are positions that you want to hold for 1 or 2 days. These aren't like the long only broad market indexes that like SPY and VOO. Oh, also, Kristen, on your VOO versus VOO thing, and I want to use this moment here as a pitch for equal weighting, which is harder to find out there than market cap weighting when it comes to broad market indexes. But Invesco's RSP, the equal weighted S&P 500, that took basically it's the same as the S&P 500, but every stock is equal weighted, not weighted based on the size of the company. That took a little bit of a dip, well, a significant dip also early Monday, but it finished the day flat. From its close on Friday to the close on Monday. Meanwhile, the S&P 500 was down, I think, 1.5% for the day. But keep in mind, this is another way to underscore the market cap weighting kind of significance. I think 450 of the 500 stocks in the S&P 500 were up on Monday. So,
yeah, I can add that too, Jeff. I mean, it's interesting how you're talking about some of the areas that were up. And that equal weight approach also not only gives you equal weight across the holdings, but also gives you better exposure to various sectors. And I was, being the ETF nerd that I am, I'm looking at what sectors performed well on that DeepSeek panic sell-off. And these spider ETFs all were up around 2%. That's the XLV, the healthcare spider ETF, XLP, the consumer staples ETF, and XLU, the utilities ETF. Those are all classic defensive areas. And that's kind of a little bit of maybe a clue about how some of the sectors may perform when there's more of a sell-off in technology. So I totally agree that the equal weighting thing, and just 2025 might be a year for diversification. So
Yeah,
good point.
yeah. Really highlights, how market cap weighting is kind of a double-edged sword. I mean, both, you can go either way, right? When market cap weighting really works well, when those big stocks, they're rising significantly. And we know the S&P 500 is very top heavy right now relative to history, right? It's not always the same. Sometimes those top 7, top 10 stocks don't have such a high weighting. Right now, they have an incredible weighting. The Mag 7 represents 33% of the S&P 500. So that's naturally going to be, of huge consequence when those stocks are moving around a lot. We talked about how NVIDIA tumbled 17% on Monday alone. On Friday, NVIDIA was the world's most valuable company, and it had the largest weighting in the S&P 500 at around 6.8%. So you combine that 17% drop for a 6% weighted stock. And essentially, I wrote on the story this week that NVIDIA accounted for 1.2 percentage points of the S&P 500's decline that day. And the S&P, like you said, Jeff, fell around 1.5%. So 80% of the S&P's decline was because of that one stock, which is just insane to me, right? I mean, you look at RSP, like you said, that was flat, but S&P was down 1.5% just because of NVIDIA, essentially.
I talk to a lot of financial advisors, and I often wonder how much their clients recognize the concentration in some of these broad market indexes that are really sold as, you're broadly diversified in this low cost passive index, 500 individual companies. They're really being just dragged around by a handful of stocks at the top. And there's nothing wrong with that, but you got to know that. And you got to, people that are in the S&P, 1.5% compared to 16%. Obviously, you're getting some diversification there. But still, the index was brought down, like you said, very, in every sense of the word by one company.
Yeah, absolutely. Yeah. So I think, there's nothing wrong with it, like you said, but people just have to understand it. And there's obviously no easy alternative, even if you're concerned about it. You go into RSP or something like that, it might work out, it might not. Obviously, over the past 3-5 years, it hasn't worked out. People thought the S&P 500, those top stocks would slow down, but they haven't slowed down. Another area, you mentioned, Jeff, was the whole leveraged ETF space. I talked about NVDL, that was down 34%. I wrote a story actually talking about how the moves we've seen in NVDL recently really highlight how dangerous these products are if you hold them for anything longer than a day or two. On Monday, I mentioned that not Monday, Tuesday, NVIDIA hit a high. It rebounded, from that low it hit on Monday, and then it hit a high of $127. And NVDL was trading at $55, right? But you go back to December 17th, and NVIDIA was 127 also. It was the same price, yet NVDL was closer to $60, right? A full 10 percentage points higher. And the reason it was lower this time around is because of that decay associated with daily rebalancing. So the underlying stock could be in the same place, but this leveraged ETF is lower. It's just decaying over time. So that's just in what happened in 1 month, a 10% decay. Isn't that crazy?
Yeah, we write a lot about these single stock strategies they wouldn't be single stock if they weren't levered. Single stock ETFs if they weren't levered or inverse shorting a particular position. Because if you just wanted to invest in NVIDIA, you wouldn't need an ETF. You just buy the stock. But we also, as Sumit, we write about this a lot about the how these can really be risky if you don't trade them. You don't want to buy and hold one of these leveraged or inverse ETFs. They serve a purpose. There's obviously a purpose because the market is just, the ETF issuers are laying these things out there and people are buying them and trading them, but these are not something for your 401k plan.
Yeah, exactly. And they act differently than, even though they say 2x, right? 2x NVIDIA. If you went into your margin account and you bought, you borrowed money from your broker and you bought double the amount of NVIDIA that you have in terms of cash in your account, that's going to act differently than this 2x leveraged ETF. Because when you go out and borrow money from your broker, you're not rebalancing every day. These ETFs are rebalancing every day, which effectively means when NVIDIA goes up, they buy more of the stock. And then when NVIDIA goes down, they sell the stock. So they're kind of buying high, selling low. And that effect is what we see with the
Another point I think worth making on these single stock and ETFs that are leveraged and inverse is that I wonder sometimes how much this category of ETFs is contributing to the volatility in the markets. Because if you want to go the traditional route of shorting or going long a particular stock, you have to go through the options market, and you can't trade in the options market prior to the market open in the pre-market period from 4 a.m. or 4:30 a.m. until the market opens at 9:30, or in the aftermarket period from 4 p.m. Eastern time until 8 p.m. Eastern time. But these ETFs can and do trade during that period. So it's going to be an interesting thing to keep an eye on.
It is. Absolutely it is. And we're going to be keeping a close eye on it. I think, this is a good place to shift gears a little bit. We've talked about DeepSeek. Now I want to talk about something we might see in the coming days. Obviously, before President Trump got elected, all the talk was about tariffs. Then he got inaugurated. First couple of days, nothing really happened with tariffs, right? It was a little bit underwhelming. He didn't really follow through on the tariffs, but doesn't mean he won't, because it turns out that he's talking about February 1st being the date that some of these big tariffs are going to go into effect. Kent, I know you wrote a story about this. Can you tell us what's going on?
Yes. Well, assuming that these first tariffs go into place or implemented, it will be February 1st, which is Saturday, 25% on a broad range of goods from Mexico and Canada. I know that President Trump is thinking about a 10% tariff on Chinese imports as well, but that's not set in stone yet. They're just kind of talking about it, thinking about it. But yeah, these are the tariffs that investors have been fretting about for months, and there's been a lot of chatter about it, a lot of concern, especially in terms of inflation, prices coming up on that, and that's something that's already been a major headwind for a lot of, especially fixed income areas and rate sensitive ETFs. So, I wrote an article this week on what sectors or what areas of the economy and ETFs that may perform well during tariffs and may not perform so well. But one area would be domestic focused companies, especially, and those would be ones with limited international exposure, such as small cap ETFs, like the iShares Russell 2000, IWM. There's a lot of other small cap ETFs out there, but that's one of the largest ones. And that would also assume that we have a so-called soft landing. The economy is still doing okay, even with this inflation. Another one may be the consumer staple select sector, XLP. If there is that inflation, consumers are shifting their spending toward domestically produced goods, but they're also trying to save some dollars, and they're shopping at Walmart or Target, Costco to save some money. Another fund that we've highlighted here before, as well as one that I covered as a potential top performer in 2025, is the financial select sector SPDR ETF, the XLF. So if we have a higher for longer rate environment, and we would, if these tariffs are inflationary, then big banks can continue to do well. And so that's why the XLF may perform. And then areas that may not do so well, of course, some of the obvious ones are international and emerging markets, ETFs, particularly those that heavily export to the United States. Some of those that we watch here, the larger ones, are the emerging markets ETF, iShares EEM, and then for China, the iShares China Large Cap ETF, FXI. And then possibly industrial sector like XLI, or natural resources like GNR. So none of these we know for sure what will happen. There's a lot of uncertainty out there as well. I mean, we don't know if some of these countries will have retaliatory tariffs. So it really is just a lot of uncertainty as to how things are going to play out.
Yeah, there is. And, I'm kind of looking at some of these international ETFs, Ken. And interestingly, EWC, which is the Canada ETF, iShares Canada ETF, it's been rallying over the past, week or two, not that far from its all-time high, even in the face of supposedly 25% tariffs coming. Even the Mexico ETF has been trending higher. So I wonder if, this is a case of investors not believing these tariffs are going to go into effect, or it's already priced in, or what do you think is going on?
Well, I don't know for sure, to be honest, but my guess is that maybe the tariffs aren't as bad as they were imagined, or maybe there's just, now that there are knowns. I mean, once the market can see what's happening, then they can make their adjustments accordingly. But yeah, I would guess that the tariffs aren't going to be as bad as everyone imagines. Typically, just not just Trump, but every politician their bark is typically worse than their bite. And that's what my guess is. I think that some traders are coming in and think this is not going to be as bad as they imagine.
Yeah. And another thing that strikes me is the numbers for Canada and Mexico, the tariffs being threatened, are bigger than the tariffs being threatened for China, at least for now. You would think, or at least historically, China's been, the number one target for tariffs when it comes to Trump. But in this case, he's been relatively quiet on the China front. I think he has been trying to make a deal with regard to TikTok and things like that. The Ukraine war, he wants China involved in that. So maybe not just an economic perspective, there's other geopolitical factors going into this. So we'll see what happens. I think China remains, the biggest story for tariffs. Are we going to see, he said 60% tariffs on the campaign trail for China, but obviously when he got into office, he's talking more like 10%. Maybe that's just the first step before he ratchets them up higher. I think this is going to be a big story to watch, what happens with U.S. and China when it comes to trade. We'll certainly be keeping an eye on it. Yeah, it's very interesting.
Yeah, I think that just to cap on that a little bit, Trump was talking about 60% tariffs on China, and now it's 10. And he said all along that they were negotiation tools and not necessarily what's really going to happen. So if you pay attention to what he says enough, I think you may not be quite so concerned, but still there's a lot of uncertainty there, and we'll definitely be following it here at ETF.com.
Absolutely, we will. I think that's a great place to wrap it up. I want to thank all our listeners for tuning in to Exchange Traded Fridays. Remember, if you haven't already, subscribe and follow us wherever you get your podcasts. And if you have a question or you want to share your thoughts, join the conversation with us on X. Our handle there is ETFCOM. Catch you next week.